Good morning and welcome to our Ashworth Wealth weekly market update. My name is Scott Thomas, and there's a couple of things I wanted to share from this I guess it's been the last couple of weeks that we've been really watching the markets, or I've been really watching the markets. We had the consumer price index come out at the end of January, which is the measure of inflation, and things were a little bit hotter than what they were expecting. The CPI increase came in at 0.3% higher, which is about 3.1% higher than last year. It's higher than what the Fed is targeting. And because of that, there was fear in the markets initially that there might not be rate cuts as quite as fast or maybe not as much as what was anticipated, maybe built into the market. And because of that, there at the end of January, 1st of February, we saw a decrease in the market. One day in particular, the markets were down about 800 points as a result of that higher inflation number. So we are still watching that very, very closely. And we still think that inflation is mostly under control. We'll continue to watch that. Those numbers will continue to come out, and the markets will continue to adjust to that. But we do think that things are headed in the right direction. I wanted to share just a couple of slides with you today. The first is how wages have kept up with inflation. This is a graph that shows from February of 2020 through effectively now that the average earnings have now caught up and exceeded what inflation has done. And basically, what that means is there have been times where inflation has gone up so quickly that wages have not kept up with inflation. And it really feels like your money's not going as far because you're not making as much relative to how fast prices are going up. As of right now, the average hourly earnings have actually gone up and exceeded inflation. So that's another sign that things are going a little bit better than what they were even back in 2020 and 2021. Things have come more back in line. I did want to address maybe a couple other things. Like I mentioned before, when the inflation number came out and it was higher than expected, that sent a ripple effect through the market, and the markets dropped 800 points in one day. Now, since then, the markets have recovered some of that, and I think it will continue to recover that. But we still are watching the Fed very, very closely and what they're doing. Obviously, the Fed, their tool to either heat the economy up if things are slow or cool it down is raising and lowering interest rates. So they're playing that game still, trying to get inflation back under control, but they also don't want to raise interest rates so high that it really staggers the inflation or that the markets can't grow. So they're really walking a tightrope here. And it's very interesting to watch as they come out and they have their meetings, what they say in those meetings and whether they hint that they're going to raise interest rates in the future or that they're going to lower interest rates in the future. The markets respond to that. Just a couple of things to note. We still expect that there will be interest rate cuts coming. Probably won't be till I'm guessing early summer, something like that. Now, obviously, that will depend on what happens with inflation, and we'll continue to get those numbers every month. But if things continue to go like they are, we still anticipate that happening. We're hoping for two or three rate cuts by the end of the year. That's what's already been built into the market. We're hoping that's what happens. Another thing that has been affected are mortgage rates. And I don't know how many have had to go out and get mortgages lately. Hopefully, not too many. But I did look up this morning to see what the average 30-year fixed mortgage was for a home. As of right now, it sits at about 7.8%. Now, it's not quite as high in Utah, but that is the national average. That has jumped up. We actually got down into the high sixes at one point, but obviously those rates are very, very closely tied to what the Fed does. And as we start having cuts, hopefully towards the end of the year, we'll hopefully see a little bit of relief in mortgage rates and what you're able to borrow money to buy a home. Anyway, we are going to continue to watch the markets. We're glad that you join us for these market updates. We hope they're informative, and we will continue to watch. We'll continue to look at the indicators. We'll continue to watch, obviously, the big one is inflation and interest rates, because those seem to be the driving forces right now in the market. As we start to get first quarter earnings, we will also report on those and kind of see how companies are doing. But anyway, hope you got some good information out of this. Please call us if you have any questions or if there's anything we can do for you. Please don't hesitate to share this with anybody that you think would benefit from seeing this. Again, thank you. Appreciate it.